All right, folks, joining me today is Jim Welsh from Macro Tides. Jim, how are you today?
I'm doing good, Blake. How about yourself?
I'm doing great, and it's really nice to have you here. You know, for those of you that have heard Jim over the years, he's been a presence on the FACE webinar. He's come in and tell us how he feels about the markets. But one of the big benefits of Jim in particular is not only does he look at the macro environment and what's happening, but he also ties it to a good technical picture. And I think that is the biggest value that Jim, well, amongst other things, but provides to all the traders out there, is being able to marry the two. And so with today, having our employment data came out today, it was weaker than expected. It was below expectations from every bank. Jim, how do you interpret that? And what do you think that the Fed chairman's going to do moving forward with the data that he got today?
Yeah. Well, I think we have to keep it in perspective, Blake. I think the number today is a head fake for a lot of different reasons. There's issues with the seasonal adjustment process just because of the volatility we've seen over the last 12, 15 months in the labor report itself. I think, we're ahead of the curve in terms of just because we're getting vaccinated, we're thinking everybody's going to open up right away. And I think we'll see that be realized in the next couple months or so. There's issues like from 2011 to 2019, about 2 million baby boomers retired each year. Over the last 12 months, it's over 3 million. And then lastly, there is some disincentive with the unemployment benefits because companies are looking for workers, and also combined still with the COVID fears out there. So there's some reluctance. So I think it's a combination of factors that led to this number. But overall, I think it was a head fake.
That's interesting. So, the reaction to today's data is pretty straightforward. Stocks are higher because they feel, oh, well, Powell is dovish, I guess rightfully so. So he's going to continue to be dovish, continue to provide liquidity. We're not going to talk about tapering. The dollar is absolutely getting smeared today. We have the euro dollar back above 121.50. And so what you're saying is, hey, be a little careful here with the weakness of the dollar. It may persist, but the question might be for how long, right?
Right. Well, I thank you for the comments at the beginning in terms of combining fundamental and technical analysis, because in the last couple of weekly technical reviews, what I've highlighted a couple things. I thought the dollar was going to have another leg down, but that it's nearing the completion of what I think is a big ABC decline from the January of 2017 high, where the dollar peaked just over 104, dropped to just about 88 and a quarter in February of 2018, bounced to 103 in March of 2020. And now I think we're in the process of completing 5 legs down for a wave C. And so I was looking for another bout of weakness in the dollar. In terms of treasury yields, I thought we were going to see the 10 and 30-year drop below the respective lows that they've hit over the last few weeks. So this employment report provided the technical fruition of what the charts, in my opinion, were likely to show. So my take has been that bond yields are nearing a low again, that this is a wave 4 correction, and that we're going to see bond yields between now and the end of the year rise above the recent highs. So I think the 10-year gets above 2%, the 30-year makes a run at 3%. But I also think Powell is not going to change his tune. So, Blake, I think the key point here is whether it was 266 or a million, Powell was not changing his perspective. They are going to wait for unemployment to come down. They want inflation over 2%. They're going to get it, and they're still going to try to be patient. So I don't think the jobs number today, one way or the other, was really going to affect how Powell is going to approach monetary policy.
Well, Jim, thank you so much for your insights. That makes a lot of sense to me, and I hope it does to all the viewers out there. And for those of you that don't know about Jim and what he does, remember at the bottom of this video, there's a link to Macro Tides. Go check him out. Jim, you provide a lot of real great insights to all of us in the trading community. Thank you so much for your time, and have a great weekend.
You too, Blake. Great talking with you.
Thanks. Bye-bye.